Hi, it's Lee, and welcome to the Tesla Economist. As we know, one of the biggest competitive advantages that Tesla has is the ability to make EVs at a lower cost than anyone else, at least like for like. The competition are not even close. You can say BYD offer EVs at similar prices, but their margins are significantly lower. And okay, they are actually competitive on range due to their structural battery pack with their Blade batteries, but the drive quality isn't close. The BYD infotainment system and controls are nothing like a Tesla. Also, a BYD is not a self-driving robot, or at least have the potential to be one. BYD have kept with the necessary basics to offer as much value as possible at the lowest cost, essentially leaving little more than an electric car, compared to Tesla being a smart car that has the potential to drive itself. Anyway, no one can make great electric cars for as low a cost as Tesla, and few other electric cars are also designed with the capability of them able to drive themselves. Tesla are the superior EV hands down. But like I said, despite the superior quality, features, technology, safety and drive, Tesla are also the lowest cost in production. This is due to the vast economies of scale you get when you only produce basically two very popular models. Well, one model incredibly popular. The cost savings of no car dealerships, no unions, vertical integration, factories that basically have the raw materials come in one end and the finished product out the other, and as many necessary steps done in between, with as few robots as efficiently as possible, and the continued refinement of trying to reduce steps, processes and parts to further speed up production and save even more in cost. Well, this is necessary, especially for the Model Y. The Model 3 will probably produce around 500 to 600,000 units a year, with what appears to be no plans for future expansion yet, as Tesla is looking forward more to robotaxis, aside from, of course, the Highland facelift to boost demand. However, the Model Y is already over 1 million units a year, with at least a further million to come from the new factories. Now, with interest rates as high as they are, it does affect demand for vehicles, but in the long run, eventually interest rates will come down, whether we go through a recession or not. This will in turn make vehicles more affordable, and the aggregate demand for cars will return. Tesla has already made such adjustments to their pricing as a result, and are now incredibly affordable, especially in the US, given the tax credit available. But Tesla is still looking at doubling their production and sales for the Model Y. As Elon said, it will be the biggest selling car in the world, which we estimate to be approximately 2 million vehicles a year, comprised of perhaps 750,000 from China, 250,000 from Fremont, and then 500,000 from the new factories. However, for the new factories to hit these kinds of numbers, they do need to ramp up 4680 sales, and this is what will make the difference. The 4680 cells are able to reduce cost by about $5,000 per vehicle just for the cells, at least within time. Then, in addition to that, advanced manufacturing techniques, meaning we should hope that the cost of these Model Ys come down quite a bit when compared to Fremont. As Tesla's prices have dropped so much already, from here, whenever the price of the vehicles come down, there is an exponentially larger pocket of demand each time, of people who can now afford to buy a Tesla. So if prices come down a further $5,000 from where they are now, then that opens up a much larger pool of consumers from when the cost of a Model Y was $66,000, and if it dropped $5,000 then, for example. So in order for Tesla to gain enough demand to sell the number of Model Ys they're aiming for, then they need to keep working on getting these prices down, which is what these new factories are all about. So it's quite simple, really. This is basically supply and demand. Tesla has targets of around 2 million Model Ys a year, or perhaps more, and thus needs to find enough demand for those vehicles by making them more attractive to new car buyers, with lower prices, added features, and further cost savings like insurance, along with no fuel. Then if enough people are willing to pay a price for them, that still nets Tesla a good profit, with gross margins likely in excess of 20% still. That's the game, at least for car sales business, excluding the potential of FSD or robotaxis. When I say the car sales business, I'm referring to Tesla's car business, not the actual auto industry. Their pricing model is very different and generally make most of their profits on the following 10 years after the initial vehicle sale, on servicing, maintenance and finance. But as Teslas require little servicing or maintenance, Tesla's model requires larger profits on the initial sale. The EV technology is still in early stages. Tesla only produced over 1 million vehicles a year for their first time in 2022, about 10% the number Toyota are at. Yet now in the US, a Tesla Model 3 is competitively priced with a Toyota Corolla if you factor in the overall cost of ownership. Granted, this is largely due to the tax credits, but Tesla is still getting in excess of 30% gross margin on their Model 3 in the US. I think once Tesla hit around 2 million Model Ys a year, or possibly a few more, then that will be about the limit for the Model Ys. Depending on the economic climate, they're likely to profit around $10,000 per unit, excluding FSD. This will be around the optimal market clearing price. After front and rear castings, structural 4680 cells, and the new manufacturing processes, I'm not sure there'll be any major step change in order to reduce the cost of these vehicles. Yes, I know Tesla have the Gen 3 platform, which will reduce costs a lot again, but my thoughts are that that will be due to a totally different model, likely smaller and more compact. I think the car will look noticeably different as a result, more like the Cybertruck or so. I don't think the Model Y could undergo a Generation 3 facelift without drastically altering the look of the vehicle. My thoughts are that the Gen 3 requires a revolutionary new look and feel for vehicles as we know it, similar transformation we saw with the Cybertruck from pickup trucks. Simple, straight lines, designed around application and manufacturing rather than actual looks. And if this is just for robotaxi purposes anyway, then it shouldn't really matter what it looks like too much, as long as it's still comfortable and utilitarian. However, the one thing that could change the level of supply for the Model Y is FSD, as if FSD is cracked, then the Model Y goes from becoming an EV to an AV, a robot car that can drive itself. This would then increase demand further for the Model Y, and possibly the new factories do have the ability to ramp up quite a bit further if necessary. I'm always shocked at the output Tesla achieved out of China with the Model Y. Some people say this is due to Chinese manufacturing skills and labour, but one might think the more automated a factory becomes, the less relevant that is. Besides, BYD also have Chinese manufacturing skills and labour, and don't come close to the level of volume production we see from Tesla. Texas and Berlin are using processes that China is not, yet obviously learned so much from China's manufacturing processes, then likely a lot of German engineering too in Giga Berlin. It has been a little frustrating not seeing these factories to their true potential yet. It could be possible those factories are capable of an even higher output per square foot than China, and that possibly the true capacity of Model Y is closer to 3 million a year. It sounds like Tesla's objective is not to slow down on production and get as many Teslas out on the road as possible, as soon as possible, meaning that margins will be variable depending on the economic climate. But the objective seems clear: to keep increasing production and get as many of these self-driving robots onto the road as soon as possible, as that is where the real money lies. Although I don't recall Elon talking about Model 3s or Ys being robotaxis anytime recently, it feels almost like that may not be a thing anymore, and perhaps instead Tesla are just going to have custom robotaxis that may be more suitable for the job. Although our Teslas will hopefully have FSD complete, which is a life-changing technology anyway. And like I said, that is where the real money is. Get millions of Teslas out on the road now, and eventually they'll be paying $200 or so a month to drive themselves, or perhaps a one-time payment of $20,000. That's a big difference, even compared to a $10,000 to $15,000 gross margin on selling the vehicle. Of course, $200 a month adds up to around $25,000 a decade, and this is how Tesla may eventually become the most valuable company in the world, through FSD, as Elon says, over the night, just adding so much value onto the product due to this new feature with a simple over-the-air update. If Tesla can reach a supply of close to 3 million Model Ys, then FSD would be the catalyst to increase that demand. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.